So I bought my property over 17 years ago. And I remember feeling at least £10 lighter because I had expended my entire disposable income as well as my savings on that purchase. And although my property has more than doubled in this period, I know this because I got it valued a few years ago, I don't feel financially secure. I don't feel rich because I own a property or own that much equity in my property. Now, you might own your home, but yet you don't feel wealthy or rich, and you might be struggling to pay your bills. Well, why is that? In this video, I'm going to break down why an increasing number of millionaires are no longer owning property, not even their residential properties. And I'll also talk about why owning a property is no longer enough and it's no longer a sign of wealth. If you're new here, hello and welcome. My name is Jumoke and I retired from my 9-to-5 career in my 30s and now live off of my investments. On this channel, I talk about my journey towards early retirement. I also talk about personal finance, investing, wealth creation, as well as self-improvement. If that sounds interesting to you, do not forget to click the subscribe button, hit the notification bell so you don't miss any of my new videos. Let's dive right in. So growing up, conventional wisdom said you hadn't arrived until you owned a property. So why is it that increasingly people feel worse off after buying their property? You would think that owning a property means that you've made it financially. No more rent, growing equity, and wealth building. Sounds like a dream. But here is the reality. An increasing number of homeowners are actually broke. In the UK, only 33% of homeowners own their homes outright. And in the US, this number is closer to 40%. Owning your home outright means that you don't have a mortgage or a debt upon that property. So this video will be split into 4 parts. The first part is explaining how property wealth is locked up. The second part is the hidden costs of home ownership. The third part will delve into why owning a property is no longer enough. And number 4, we'll talk about what you should do after owning your property. Now, we live in a world of rapidly growing inequality. And what this means is that even if you own your home, you remain at risk of losing it. So you own your home, but yet you're living paycheck to paycheck, or perhaps your bank account is running on fumes. Why is that? This is because owning a property does not necessarily mean you have access to money when you need it. Now, here is the problem. The equity portion in your home, i.e. the value of your home minus any debt you owe, might be worth $300, $500, $1 million of pounds, but can you actually spend that money? The answer is no. And this is because that wealth or money is tied up in your home. It's what we call illiquid. The only way you can unlock or realize that capital is by either selling your home or taking out more debt through remortgaging. You'll often hear that property wealth is locked wealth. And this is why so many homeowners who are technically wealthy on paper feel broke in reality. You might say, well, I own my property and I can sell it at any time and buy a new one. You're absolutely correct. But here's the thing. As inequality grows and the rich get richer, of course, we all know the rich love assets. And as they buy more and more assets and more properties, they are bidding up the price of these assets, which most likely means that what your $300,000 or $500,000 or pounds can buy in terms of a new home is getting smaller and smaller, which also means that if you sell your assets, you cannot transfer that to your children and the generations to come. Unfortunately, your $300,000, $500,000, $1 million of pounds in equity isn't actually the money you get. You get an amount that is lower than that after fees. Now let's talk about the hidden costs of home ownership. Owning a property isn't just about paying off the mortgage. Your mortgage is most likely going to be your largest cost on a monthly basis, but there are other costs to consider. You've got property taxes, insurance, maintenance bills because leaky roofs don't fix themselves. You've got interest on your loans. You have unexpected repairs and other home-related bills. These costs add up really fast, and before you know it, a huge chunk of your monthly income is going straight back into your house, leaving very little for savings or investments or planning towards retirement. Now, here is why some homeowners are still broke. So what do homeowners do when they need cash from their property? They borrow against their house. And this process is called remortgaging or taking out a home equity line of credit. That sounds commonsensical and easy enough, right? Here is the catch. Whether or not you have debt outstanding on your property, you are turning your house into a debt machine. More loans on your property means more monthly repayments. And before you know it, you are house rich, but you are drowning in debt. And so borrowing against your house, whilst it might be a short-term fix, becomes a long-term trap. And the worst part is, yes, I haven't talked about the worst part. If the market crashes and the value of your property dips, you could end up owing more than your property is worth. Now, here's an example. You buy a property that is worth $300,000 and you take out a mortgage for $240,000, which means that your equity contribution is 20%, i.e. $60,000. And let's say that over the next 2 years, you manage to pay off $10,000 of your mortgage, which means that you have $230,000 left in terms of the debt on your property. And now imagine that we have another housing crisis and now your property is actually valued at $210,000. And let's say at this point you still have an outstanding mortgage amount of between $220,000 to $230,000, but it's now worth less. And so you owe the bank more than your property is worth. This is what is called negative equity. Now, although this is relatively rare, this is how people can go from being a wealthy homeowners to being in financial crisis very fast. I hope by now it is obvious why owning a home is no longer enough and you need other assets, i.e. you need liquid assets. Unlike shares or bonds or cash, you can't take a piece of your home and sell it when you need quick cash. This is precisely why owning other investments beyond your home, whether that is financial instruments or savings or cash, matters, because these investments are liquid enough to ensure that you can access them fairly quickly if needed. Additionally, because some of these instruments pay interests and dividends, you can command a respectable amount of income or cash flow while you hold them. And this is also why rich people like what we call a balanced portfolio and hold other assets beyond property. Now, I felt that this video was important to put out, and I feel this conversation needs to be had, because I believe that owning a property in 2025 and beyond is not the same as when our parents and our grandparents owned properties years ago. The dynamics have changed, inequality is growing, and I've had conversations personally with acquaintances as well as friends, doctors, engineers, dentists, lawyers, etc., who aren't in the financial field, who own their property but don't have any other investments. They are struggling at the moment because over the last 2 to 3 years, they've suddenly seen their interest payments on their properties balloon. And this was an expense that a lot of them hadn't planned for. Majority of these people are individuals with families, with children, and have a lot of bills to pay. So the conversation has really shifted towards, right, how do I use my residual disposable income to build other streams of cash flow? And so I thought to let you in on the conversation and put out this video. And just like that, we have come to the end of another video. I will see you in the next one. Bye for now.